let's bring on board Aditya Kondavar to discuss the latest D Street debut. ICICI Pru AMC is going to debut on Street now in just a few moments from now. Aditya, significant premium is what at least the stock price is hinting at. Give us a pulse of how would you compare this one with some of the other listed AMCs, and you can compare it only with some of the top caliber ones given the kind of size and scale that ICICI Pru has, right? And therefore, how does it compare? First, give us a sense of that.
Good morning, Harsh.
Good morning.
I think we are seeing approximately a 22% kind of a premium on the company. And like you correctly said, you can only compare this company with the with the other heavyweight, which is HDFC AMC. Now, surprisingly, the market cap and the AUM that the two companies manage are now converging. Both the companies have assets of close to 9 lakh crores. And with the kind of listing that we are seeing, ICICI Prudential AMC will be a tad higher in terms of market cap, around 1.3 lakh crore versus HDFC's 1.25 lakh crore. Now, the proof of the pudding is in the kind of assets that they manage, and of course the operational profits. Now, if you look at ICICI Prudential, the kind of operating profits that they generate are far superior, and the asset mix is also leaning more towards equity and alternates. Now we have to understand, Harsh, that in alternates you also have profit booking models. So the past few years look very good on that front in terms of margins, because you have a certain profit share, and as we all know, markets did very well post COVID.
Okay, so that's on the comparison between ICICI and HDFC AMC. Aditya, hi, morning. Give us a sense of the kind of subscription figures that we've seen for this IPO. Overall looking robust, but retail sentiment is not up to the mark where we've seen QIBs or NIs showing interest. Just a 2.5% subscription. Do you think this has to do with the number of shares being offered and the price at which the shares were being offered? Do you believe there is still more value left on the table for retail investors? And also, is the fact that this entire IPO is an OFS, do you think that has deterred may not be the right word, but retail investors have not subscribed to the extent of the other investors? So what's your take there?
Interesting question. I think number one, retail investors should deserve far more credit than they get, number one. And number two, I think you're right in the sense that the price may have been a big deterrent, because the biggest misconception that you have in the markets is that, just because a share is priced higher, it is expensive, right? It does not work that way. You have to look at the underlying earnings. And number two, I feel that, given where the markets are over the past 12, 14 months, it has been a journey of turbulence, right? So retail investors also took a back seat, because we all know that IPOs purely work on euphoria, right? I mean, subscription figure aside, over the past couple of IPOs, in fact, I have been noticing that retail participation has mellowed down a lot, which is in fact good, because retail should not think that IPOs are a lottery ticket. Okay. And number two, I feel that, talking about the runway, I believe that AMCs in general have a very bright future in India. Let me just give you one metric. The biggest bank in the US today is JP Morgan. Okay. Its balance sheet is approximately $4 trillion. Now, when you look at USA's biggest fund manager, which is a BlackRock or a Vanguard, they have assets of approximately $11 trillion. Now, when you look at the same thing in India, it is reversed. SBI has a 70 lakh crore balance sheet, and our biggest mutual fund is approximately 13 lakh crores. So I feel there are two things that will unfold here.
Aditya, pardon me for the interruption. We just have the listing ceremony underway for ICICI Prudential AMC. Let's see where the stock has listed, because the issue price...
It's listed at 2,643, which is a 22% premium. Largely along expected lines, frankly. So you've seen a substantial uptick with regard to those who have received allotment already in terms of the stock price. And mind you, this is an allotment where holders have received just about 6 shares, if at all you've received allotment, and therefore the number of shares have been lower. But of course, that's not the way to look at it. The better way to look at it is the return that you make, and it seems like the management has left a decent amount of money on the table. Aditya, please go ahead, complete your point.
US, where the where the fund management company has a larger AUM than the biggest bank, I think India will also see something like that, right? And number two, Harsh, this is a fantastic business. Look at the ROE; it's almost close to 90%. Look at the share capital of the business. It is so low. And after the joint venture was formed in 1993, I don't believe that other than a few hundred crores of equity infusion that happened over the course of some 30 years, there was no other fundraise at all, right? So that's why this is an OFS. And asset management company is a fantastic business because you don't need a lot of fixed costs in this. You don't need a lot of variable cost in it. Your only raw material is the relationship managers that you have, the wealth managers that you have. So this is like a infinite ROE scalable business. And that is the reason why you have seen those subscriptions come in at what it is. And you have also seen the listing at what it is. And I personally feel that, AMC's wealth management companies in India have a very large scope going ahead because, the next generation doesn't want to put their money in savings accounts, FD, or other typical traditional investment products. They want an instrument that helps them grow money at a double-digit return, as simple as that.
Aditya, how do you take the entire debate with regard to expense ratios coming off a real risk in your opinion, or do you believe that it will largely only aid financialization of savings, given that the expense ratios will come down and size and scale will actually aid the larger companies rather than the smaller ones? And within that basket now we have two listed players rather than one, and therefore both of those is where the money will actually move towards, and their valuations will largely remain at equivalent to one another. And is that the right way to kind of think of this? How do you think of it?
So number one, Harsh, I believe that SEBI's step is right and in the interest of the larger investor base in the country. 15 years back, our total mutual fund industry size was 10 lakh crores. Today it is close to 70 lakh crores. We will reach 150, 200, 300 lakh crores. So I feel that this is the right step. We will see more and more investors come in. And as to the market cap convergence of both the companies, let's see how it plays out. The next 1 to 2 years are very important. I still believe that over the long run, I mean, this is just a short-term thing, the expense ratio. In the long run, I think this will give a huge fillip to the sector, and we will see crores of new investors come in and giving their hard-earned capital to the fund managers.
Aditya, thank you so much. We'll let you go on that note. Thanks for coming in and giving us that perspective on this very critical day. And viewers, hopefully this gives you a better perspective on what to do with an ICICI Pro if you did get allotment, or what to do on opening day even if you did not. So broadly,